Okay, so for the students who are in Sydney, I'll just give you information that I'm sitting here in Adelaide with a student and another one to arrive, I hope. And we've done some of the audit sampling lecture last week, but I'm going to do a very quick recap and then lead you through the rest of this topic. So I'll share the screen all of the time. It might be a little bit disjointed, but it's the best that we can do. So this topic being audit sampling, we'll just look at the objectives. You can read through those. These are very specific and it's a big chapter, so don't worry about trying to read the chapter, just concentrate on the objectives that I've got here. You've got to be able to define an audit sampling and understand its applicability to auditing. You need to be able to differentiate between sampling risk and non-sampling risk, distinguish between statistical and non-statistical sampling, explain the steps in planning a sample test, indicate factors that affect sample size, describe methods of selecting a sample, and know the steps involved in audit sampling. So we're not going into great detail. This is a once over very lightly. I'm just going to go through the first few slides quickly. When we talk about audit sampling, we're talking about taking a selection of items to subject to an audit procedure. We're not going to take all of the items in the sample. Like if you were going to audit plant and equipment or buildings, you might audit all of the buildings. In that case, you're not doing sampling. And because we sample, it means that we can only provide a reasonable assurance that there are no misstatements. Every time we sample, there's a risk that we miss something because we took a sample and we didn't check everything. This is called sampling risk. It's the probability that we're going to come to the wrong conclusion because we took a sample. If we're talking about tests of controls, so we take a sample to do tests of controls and we come up with the wrong conclusion, it could be a risk of over-reliance or a risk of under-reliance. Could be that the sample says the controls are good, so we rely on the control when in fact the controls don't work. That's the risk of over-reliance. You over-rely on the control. Then we've got the risk of under-reliance. Actually, the controls are good, but your sample showed that the controls aren't very good, so you didn't rely on them and you did more substantive testing. When it comes to substantive tests of details, then if we're talking about sampling risk, it's the risk of incorrect acceptance. I've said that the balance is correct when actually it isn't, or I've said that the transactions contain no material misstatement, but actually they do. And the opposite of that is I've said that there are a whole lot of misstatements there because my sample was full of them, when in fact the whole population shows very few. And it just so happened that I picked out some that did. And then we've got non-sampling risk. Non-sampling risk is the risk that I come to the wrong conclusion, not because I took a sample, but for some other reason. I didn't do a good job, I did the wrong test, I didn't plan it properly, something like that. Okay, I now want to look at statistical sampling versus non-statistical sampling. You've all done quantitative analysis by now, so you understand what statistical sampling is, and you know about statistics, you know about probability theory. If I do statistical sampling, I'm using all of those skills, and I have to comply with all of the requirements of statistical sampling. If I use non-statistical sampling, I don't have to comply with all those statistical sampling rules. And what I'm actually using is my judgment as an auditor as to how big the sample should be, what I should take, you know, how I select it, etc. And in many instances, the auditor will choose non-statistical sampling. In fact, that is the most common form of sampling in auditing. And there's a study that I refer to on this slide that was done in 2002 that found in the US 85% of sample selections were actually non-statistical. Now, using samples for audit tests. This is where I really want to pick up. So this is slide number 9 that we're looking at here. In sampling, the auditor takes 3 phases. There's 3 phases or 3 steps to this. One is to plan the sample, and you can see there's 1 to 9 steps there. There are 9 steps in that. Selecting and testing the sample and evaluating the sample. Now, I just want you to be able to follow through these things and understand what's happening at each step. So this is the planning phase. In the planning phase, the first thing I have to do is state the objective of the test. Secondly, I've got to decide whether audit sampling applies. And thirdly, I need to define the attributes or the deviation conditions that I'm going to be looking for. And I will go through these things in more detail in a moment. I just want to go through them quickly and then we'll look at them individually. If I'm looking at tests of transactions, and those tests of transactions could be tests of controls or substantive tests of transactions, then I'm looking for an attribute. What is it that I'm looking for in my sample? And how do I know if it's wrong? If I'm looking at a test of detail of balance, which is the TDB, then I'm looking for a misstatement condition. As I said, we'll come back to that. Then I have to define my population, define my sampling unit, and specify my tolerable deviation rate or my tolerable misstatement if it's a test of detail of balance. I then have to specify sampling risk or my risk of over-reliance for tests of controls or incorrect acceptance for tests of details of balances. I have to estimate the population deviation rate or the misstatements in the population. And finally, I determine my initial sample size. So I've gone through all those 8 steps simply to work out how big a sample I have to take and where I'm going to take it from. Okay, so that's the planning. That's what I do before I do anything else. Now I want to go through each of those steps so you understand what they are. The first thing is the objective. If I'm doing a test of control, the objective of this test is to estimate the rate of deviations from the prescribed control, and that's what we call a deviation rate. So I might have a control, for example, in relation to payroll. The control might be that the accountant reconciles the total tax taken out of wages each pay period with the amount that gets sent to the Australian Tax Office. That would be a test of control. And that control is testing to ensure that the amount that you've taken out of people's pay is the same as the amount that goes to the tax office, that there hasn't been a mistake there. So it's accuracy. Have I accurately sent in the money to the tax office that I should have? And I would test that control because that's a good control. So we reconcile, what have we taken out of the wages, how much was sent to the tax office? The accountant does that after the event. Now, if I want to test that control, I want to know how many times does the accountant actually do that? Do they do this or don't they do it? So that would be my test of control. I would have to design a test that would check for that. If, however, the objective of my test is to estimate monetary misstatements, which is a test of details of transactions or details of balances, then what I'm trying to do is estimate how much of a mistake has been made, how many misstatements have occurred. So the objective is to see what is the deviation rate from a control if I'm doing a test of control, or how much of it, what's the dollar error of all the mistakes and errors that have been made in the financial reports. So we need to determine that. Then we've got to decide whether audit sampling applies. And the question is, are we going to test the whole population or only part of the population? If I'm doing analytical procedures, I would normally use the whole population. I would compare total revenue this year with total revenue last year. It's not a matter of sampling when it comes to that. And in that example that I gave, if I'm checking to see whether a reconciliation has been done, I might not take a sample of reconciliations. I might check each one. Is there a reconciliation every month? Because there's only 12 months in the year. So instead of sampling, I would check to see if it's done every month. If, however, the pays are sent in weekly, 52, I might go, oh, I don't want to check all 52. I will just check 10% or something like that. So I need to decide, am I going to take a sample or am I going to test the whole population? We've got to decide that. If we decide to test the whole population, I don't go on with the rest of the tests, with the rest of the steps. I simply stop there and go and test the whole population. But let's suppose we do decide to take a sample. So we've got to go forward and select our sample. But before that, because we're still in the planning stage, I need to identify the attribute and the deviation condition or the misstatement condition, depending if I'm doing a test of control or a substantive test. So again, if it's a test of control or a substantive test of transaction, we've got to define the attributes of interest and the deviation condition. Now, what do I mean by an attribute of interest? The attribute of interest is the thing that I'm looking for. If my control was a signature on a timesheet, the attribute of interest is the supervisor's signature. That's what I'm looking for. Deviation condition is there is no signature. Or there's a signature, but it doesn't belong to the supervisor. So I need to decide what that is, because keep in mind, whenever you're going to design a test or a procedure, you've got to give it to someone else to do. So you've got to make sure your instructions are accurate. So I have to say, I don't say go and check the timesheets. That means nothing. No one knows what to do if I say go and check the timesheets. What I need to do is say go and inspect the timesheets and ensure and look for the supervisor's signature. If there is no signature, then that's a deviation condition and you report that. Mm-hmm. I'll just tell you that I'm recording this session for students in Sydney and Melbourne. Okay. So I'm kind of doing it more like a lecture tonight. Uh-huh. All right. Okay. Yes, that's right. So I'm the only one on the screen. So get on the screen. So we've got to define our attribute of interest. What is it that we're actually looking for? If I'm doing a test of detail of balance, I'm looking for any monetary misstatement in the account balance. So the attribute I'm looking for here is a misstatement. I add up the cash and it comes to this amount. In the financial statements, it comes to a different amount. What's the difference between the two? So I've got to identify the thing that I'm looking for. Step 4, identify the population. So the population is the whole set of data that I'm going to be drawing a sample from. It might be the whole payroll register. So I might look at the whole payroll, I might take the whole payroll register for the year and select a sample of transactions in the payroll register across 12 months. I might say, take a sample of timesheets from the April payroll records, in which case the April payroll records are my population. I might ask them to take a sample of items from all of the transactions that occurred while a particular supervisor was in charge. Then that would be my population. So you've got to think about what is your population. If I wanted to check that casual employees were paid correctly, so the accuracy of the casual wages calculation, then my population won't be all of the timesheets. It would only be those of the casual employees. I'm not going to take a sample including people who are full-time, because I've got a whole lot of people in there who I'm not interested in. So you need to identify your population to make sure that you're actually selecting your sample from the right group of transactions or balances that we're looking at. Now, it's possible to what we call stratify the population. You might have come across this term in quantitative analysis as well. And the stratification of a population means you break it into different sections. So it increases the efficiency of your sample selection and your procedures, and it allows you to focus on things you're particularly interested in. If I'm doing an audit of asset balances, I'm generally interested in finding out whether assets have been overstated. That's, what management are going to do if they're going to report fraudulently, they're going to try to overstate assets, understate liabilities. So when I'm doing my stratification of a population for assets, I would make sure I include high value items, because if I've got an incorrect high value item, that's going to have a much bigger impact on my financial reports than a little balance. Liabilities, the other way around. I might check zero balances in accounts payable to make sure that they haven't been incorrectly written back to zero. So I've got to think about how I might stratify the population. And I might take more items from some areas and fewer items from another area. I would also be thinking about where is the most likely misstatements going to be found, where is it easiest, like if it's an organisation that is very cyclical in their activity, very busy at holiday time, then I would make sure I select more items from that period because it's more likely to have mistakes in it. So the auditor has to think about these things. So that's identifying your population. And then I have to decide what my sampling unit is. And the sampling unit is the individual item that makes up the population. So it could be a record in a personnel file. It could be an electronic payroll deposit. It could be a timesheet. It could be a payroll slip. I need to decide what is the sampling unit that I need. If I'm sampling inventory, it would be an item of inventory, a physical item. So if I want to check for existence of inventory, my sampling unit has to be an item of inventory. If I want to check for completeness on the records, then I would be looking at the records. In fact, I just said that back to front, and I do this all the time. I just said that back to front. If I was checking for existence, my sampling unit and my population would be entries in the inventory register. And I would have to take a sample of items in the inventory register and go and have a look to see if the item exists.
Yeah.
If I want to check for completeness, I would start with a sample of physical inventory items and see if they are included in the register. Okay, so we've got our tracing and vouching. So if I confused you then, just play this back and have another listen. Very important, because it depends on what the audit objective is, which is this next point, depending on what your sampling unit is. So you have to think about it in your head as to exactly what it is you're trying to get. Okay, so that's step 5. Step 6, we specify our tolerable error. Now, before you started to study auditing, you may have thought that financial statements have to be completely correct for an auditor to sign off on them. By now, you would be realising that that's not the case. We accept that things may not be exact, that there's judgment involved, that we're only interested in material misstatements. I don't care if the cash is misstated by 1%, even if the balance of cash is $1 trillion, 1% is not material, unless it's been stolen or there's some misappropriation there. So I've got to decide how much am I willing to let this balance or the control, the deviation rate go before I say it's materially misstated. So this is what the tolerable misstatement is. So it's the maximum misstatement in an account balance that the auditor is willing to accept. And I've got a reference there, ASA 530, paragraph 5, if you want to have a look at that. And if I'm talking about controls, I'm saying how many times can someone not carry out a procedure before I say it's not working? Now, let me give you an example for this, a very simple example. And I'm taking this from a paper that was written some years ago by an ex-colleague of mine and some of her researcher friends back in, what year? I don't have the year here. That's terrible, isn't it? Anyway, they wrote this paper and used as an example chocolate chip cookies and looking at explaining sampling with chocolate chip cookies. So supposing the cookie company says you'll get 20 chocolate chips in each cookie. Okay, they make a statement, an assertion. They're asserting that there are 20 chocolate chips in each cookie. And I'm going to go and audit that. So I'm going to take my sampling unit. Well, my population would be maybe all the cookies that they have in stock at the moment. And I might take a sample of those cookies. So my sampling unit would be a single cookie. And I would examine that cookie. What is it that I'm looking for? What is the attribute of interest? The number of chocolate chips in the cookie. There have to be 20 chocolate chips in each cookie. So I go about counting them. And I count some, and I can count 19, I could count 18, I might count 23, whatever. And I think, well, they're not exactly 20 in each cookie. Does that bother me? How far out can it be for me to say, no, there are actually about 20 in a cookie, and I don't have to report them to the authorities for, false advertising. So that is my tolerable misstatement. How many? Could it be 16? Oh, no, it's getting a bit low. 17, 18? I have to decide. As the auditor, I've got to decide what I will accept and still say, yes, you get 20 cookies in each of the 20 chocolate chips in each of these cookies. So what constitutes that error? In terms of a deviation rate, if I'm testing the controls in that company, and I say, what controls are in place to make sure there are at least 20 chocolate chips in each cookie? And they might have a dispenser that drops out about 20 chocolate chips on top of each cookie, or they might have the chef counting the cookies that go into each one. I don't know what controls are there. Supposing it's the dispenser, the automatic dispenser. I would want to be sure that that dispenser works effectively. So I might say, do they actually use the dispenser, or do they just chuck in a whole lot of chocolate chips into the batter, and randomly, some might have 25 and some might have 15. If they use the dispenser, I would say, well, I've got to check to see if this control operates. So I would visit the premises from time to time and have a look to see if they're using the dispenser. And I would take a sample of the chips that fall out of the dispenser and see if it's 20. And do they line up over there? Is it all operating? Now, then I have to work out, well, if I call in one day and the dispenser's not operating, then that control is not effective. Now, if it happened one day out of 30, I might say, oh, well, that was just an unfortunate occurrence. The other 29 days they used it, so I'm satisfied that that control is operating. If, however, every second time I go there, that dispenser is not being used, I would probably say that control's not operating. So what is my tolerable deviation rate? How many times could I go there and see that it's not operating and still say that control is effective? As an auditor, I've got to come up with that number. You know, it's difficult. If I said half the time, you'd probably say, oh, no, that's not right. If I said 3/4 of the time, some people might say, yeah, I'd still accept that. If I said 90% of the time, most people will probably go, yeah, that's all right. That's because we're talking about how many pieces of chocolate are in your cookie. If I changed the scenario and said, this is a pharmaceutical company and it's measuring the amount of morphine that goes into a vial, oh, tolerable deviation rate is not going to be anywhere near that. It would have to be almost perfect.
Yeah.
It might have to be perfect before I accept it. So it depends how important it is. And again, this is where an auditor works out how important is this balance? How important is that balance? I have to use all of my judgment to determine these things. But these examples give you a bit of an idea of how this all operates. Okay, so then I've got to work out what's my sampling risk. Sampling risk or confidence level. How confident can I be that I'm going to come to the correct conclusion based on my sample? And as I said earlier, for tests of controls, sampling risk is the risk of over-reliance, the risk the auditor accepts the controls are effective when actually they're not effective. For substantive tests of transactions, the risk of over-reliance is the risk the auditor accepts the rate of misstatements as tolerable, when in fact the actual rate of monetary misstatements is higher than my tolerable error. For substantive tests of balances, the risk of incorrect acceptance is the risk that the testing suggests a material error does not exist when actually it does exist. This is what I'm really worried about. And we talk in terms of low, medium and high. We talk of, I should finish that sentence, we talk of low, medium and high if we're using non-statistical sampling. If we're talking about statistical sampling, we come up with a number. So you might remember from stats, you've got a number that is your sampling risk. So with non-statistical sampling, we can't quantify that sampling risk. We only know if it's low, medium or high. I can talk about, the next step is expected errors. And this might sound a bit strange, but before we go into an audit, we work out where we expect the errors to occur. And we know that there will be errors. We don't expect everything to come out exact. For tests of controls and substantive tests of transaction, we call this our estimated population deviation rate. And I'm actually going to skip over this slide because it gets fairly complicated. I guess the only point that I want to make from here is when we talked about tests of controls and measuring control risk early on, and we decided that if the controls don't work, we're not going to test the controls, we'll just do substantive testing. So in this top section up here, for tests of controls, if my expected error is high, I need to increase my sample size. So the greater the number of errors I expect, the bigger my sample size has to be. I'm going to reach a point where I expect there to be so many errors it's not worth me testing because my sample size will have to be the whole population. And that's why we say stop doing that testing and go and do substantive testing. So that's what this slide really means. It does become quite complex, and I won't go into this because I don't expect you to understand completely. I want to focus on the areas that I really do expect you to understand. The ninth step is determining the initial sample size. And again, there are lots of factors that come into this. Appendix 2 and 3, or appendices 2 and 3 of ASA 530 go into the sort of things that will affect sample size. It's worth having a look at those. But again, I won't go into those. The sample size is affected by the degree of sampling risk the auditor is willing to accept, and the auditor's main consideration is determining the sample size is whether sampling risk will be reduced to an acceptably low level. If I can't get my sampling risk down to an acceptably low level, then there's not much point me testing it. I just can't rely on it at all. So from steps 1 to 9, it's the planning phase. Step 10 and 11 is the second phase, and that's where I actually select the sample and perform the audit procedure. So I've worked out how many I have to have. I know what my population is. I know what my sampling unit is, what my attribute of interest is. I now know I've got to go and select the sample. That's the next phase. And once I've done that, I've selected the sample, I've performed the procedure, then I have to evaluate the results. And our focus will be selecting the sample. So you need to know the planning phase up to 6 very well, and you need to be able to select a sample and perform the procedure. There are 2 types of sample selection: probabilistic and non-probabilistic. Probabilistic sampling requires you to select the sample randomly. And you can use random number tables, you can use your random number generator in Excel and other audit programs, or you can use what we call systematic sampling. And we're going to go through systematic sampling just so you know what that is. Non-probabilistic sampling, this is relevant if I'm doing non-statistical sampling. I can use these. If I'm doing statistical sampling, I have to use probabilistic sampling. If I'm doing judgmental sampling, then I can use random or systematic, but I could also use haphazard sampling. Now, do I describe haphazard? Okay, haphazard sampling is, sometimes people get confused between random and haphazard. An example of haphazard sampling would be if I was standing in a class with 100 students and I wanted to find out if they watch a particular television program. And I pointed to people, what I would incorrectly be saying randomly, but haphazardly, and say, you, and you tell me if you like this program. Now, you might think on the surface that that is random, but actually it's not random because we have a bias. I'm not likely to pick 4 people sitting next to each other. I might not pick someone right up the back because they're hard to pick out. I'm more likely to pick people towards the front, in the middle, and I'm more likely to pick people who are looking at me than people who aren't looking at me. So that's an example of haphazard sampling. It's not acceptable for probabilistic sampling because of the biases involved. Easy to avoid. You know, if I was selecting invoices out of a filing cabinet, I wouldn't select 2 or 3 together and then 1 at the end and da-da-da. That haphazard has got too much bias involved. If I was trying to hide it, I would squash it down so it's hard to find. I might stick it, or, you know, attach it to another invoice or something, and so that it could be avoided. So haphazard is different to random sampling. Understand that. And I can only use probabilistic sampling for statistical.
Susan, for example, if I have invoices,
Yes.
to find myself. Tick, 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 one.
Yes, that's haphazard. That's right. Whereas if you ran an Excel random number generator and put in the first line and the last line, it would randomly select. And you might find it chooses 3 or 4 next to each other. Every item has a chance of being selected. Now, systematic sampling. This is used quite commonly, and it's a very efficient way where things are filed in a particular order. So let's look at an example of this. Suppose that my sample size is 20 items and I've got 1,000 items in my population. The first step is to calculate the sample interval. That is, do I take the 10th item, the second item, or whatever? So I calculate my sample interval by dividing the population by the sample size. I want 20 items out of 1,000, so I'm going to select every 50th item. Now, that might not sound very random to you, but it is, because I choose the starting point randomly. So I will choose a random start, and again, I've got to do it using a random number table or something else, and I've got to choose a number between 1 and the sampling interval. So in this case, I've got to choose a number between 1 and 50. For example, I could choose 17. So I start with the 17th item, and then I choose every 50th item after that, until I have 20 items. Now the next slide, which I won't dwell on, I want you to do it. I'm trying to get through this in 40 minutes so I don't run out of Zoom time. But you need to select a sample of 5 entries in a purchaser's journal using systematic sampling. The number of entries in the purchaser's journal is 98. You need to calculate the sample interval. Oh, hang on, I've got 5 entries. So what is it?
19.6, sorry.
19 point something or other.
Yeah.
Okay, so we bring it up to the next number, which is 20. So this one was 19.6, I think it works out to. 98 divided by 5, 19.6. So my sampling, I can't have a fraction of an invoice, so I go up to the next number. Then I choose a random start. My sample interval is 20, so I've got to get a number between 1 and 20. Let's suppose I choose 14. And I continue to add the sampling interval to the random start. So I end up with 14, 33, 52, 71 and 90. Check it to see that I've got, do it yourself to see if I've actually got those numbers right. And you could experiment again with different numbers and just see if you can get that calculation correct. So that's systematic sampling. So you could do random sampling using Excel, or you could do systematic sampling. And I'd be happy if you could do those things. And I would be happy if when someone says to you, oh, we're going to use systematic sampling, you know what they're talking about. You know you need an interval and you know you need a starting point. Statistical sampling techniques, there are lots of different sampling techniques. The ones that we use in auditing are the attribute sampling for tests of controls and variable sampling for substantive tests of transactions. And there's one that has been designed specifically for auditing. I won't go into that. It's called probability proportional to size sampling, and it concentrates on high value items. It's a very clever and effective way of sampling, and instead of having items as your sampling units, you have individual dollars. So you sample $1 in each balance. And it's also known as monetary unit sampling. Unfortunately, we don't have enough time to go through that. If you're interested, have a look at it. Okay, I'm just going to check the time that we have. Oh, actually, I don't know that this will come up with the time. I'm going to keep going until the Zoom session bombs me out. So let's keep going. I want you to do an exercise. Now, I used to use this in class, and I would bring in a big packet of little sweets called Ovaltines. Another time I used wasabi peas because I happen to have little packets of those. And we imagined that we're going to do an experiment with that. We're going to carry out an exercise to see whether the right number of items are in the packets. Now, I didn't bring any of that with me today, I'm afraid, so it's not munchies. I do have a packet of paper clips. And in these, a box of paper clips, a whole box of paper clips, and there are little boxes of paper clips inside, and it says there are 100 clips in each box. So I want to carry out a procedure that verifies the manufacturer's assertion that there are at least 100 clips in each individual packet. Or I've got there, if it was something to weigh, I could do that. What have I done? So I don't need to weigh them. I don't have scales. So that's just for different ones. So we've got our steps in audit planning. We need to state our objective, decide whether audit sampling applies, define the attribute that should be present, etc., etc. So I know now that I've already said the objective is to check the accuracy of the claim that there are 100 clips in each box. That's my objective. So this is a substantive test. It's not a test of control. And it's a test of balance. How much is actually in there? I'm not saying what are the transactions that took place doing this. I'm saying how much is there now. This is balance day, right? So this is what we're doing. So audit sampling does apply, because if I had a container load of these boxes, I want to be sure that the manufacturer isn't cheating me. You know, they've sold me this great big container load of staples. I want to know that I've actually got 100 staples in each box. So what's my population? At this point, it's this box. Yeah. That's right. It might be the container, but let's use it. It's this box. Are there 100 staples in each of the little boxes contained in this box? So I would need to take a sample from there. So I randomly select boxes of staples. All right, so there's my population. This is my sampling unit. I need to specify, oh, hang on, I did my misstatement condition. Go back to point 3. Define the attribute that should be present and the misstatement condition. So what's the attribute? The number of clips. That's what I'm interested in. Oh, I dropped one. The number of clips in each box. The misstatement condition?
Like the box is in a good condition? Like
no, not interested in that. This one isn't. There aren't 100. Okay, if there were more than 100, would I be worried?
Yep.
Okay. What if, I mean, would I really, I've purchased them. Am I really interested if they put more in? Is that what I'm worried about? What am I worried about?
Then I like
less, yeah. So I'm really trying to, I've got to do a test and measure. I don't want fewer than 100 in this case. I don't really care if there's more. If I was measuring, again, a pharmaceutical drug, yes, it needs to be, I'm going to stay there. It needs to be either way. But for this one, excuse me, this one, I'm really interested in understatements. So what's my tolerable misstatement? What would I accept and say in my sample? If I count these and they don't actually add up to 100, what would I accept before I send them back?
Like 95%.
Okay, 95? So if you had a container load of these and they actually only contain 95, not 100, you'd say, oh, okay, I'll accept that. Okay? were tolerable. I wouldn't. I'd go 99%. I would accept 19. I don't think I'd accept anything less than 19. But we have to now specify the sampling risk, the allowable risk of incorrect acceptance or the confidence level. Now, specifying the acceptance risk, I would say, what have we got here for the allowable risk of incorrect acceptance? I attest that the assertion that all boxes in the shipment contain at least 100 clips is materially correct. How confident do I need to be? Maybe I need to be 90% confident. If I said, oh, look, I only need to be about 80% confident because I don't care that much, and I'll accept it. There's a difference between your tolerable error and your confidence level. Like if I had, again, let's go back to the pharmaceutical example. I might say my tolerable error for the number of pills in a bottle is 0. If I say there are 30 tablets in that bottle, there need to be 30 tablets in that bottle. Any more, any less, completely unacceptable. There's a misstatement. Now, how confident do I need to be that that's the case? I need to be, because I'm only going to take a sample. I know I can't be 100% unless I test every bottle. There's a chance one bottle might get through. How confident do I need to be? Oh, probably 99% confident. How many what about if there are fewer paper clips in there? Oh, I'd say 80% confident. That's going to determine my sample size. How many do I have to test before I reach my confidence level? All right. If it was the drug, then I'm probably going to have to test twice as many as I would for paper clips, because it doesn't matter that much with the paper clips. If it was jewellery, I would need to know that every piece of jewellery is in there.
Yeah.
I would check more than it was if I had matches or, a cheap trinket and one of low value. Okay. Estimate the misstatements in the populations. Well, let's say I would expect there to be one paper clip either way, either one too many or one too less. And I determine my initial sample size from that. Now, because we've only got 2 of you sitting here, my sample size is just going to be 2. So what I would do is ask you to count paper clips in your box. Now, I'm just going to stop sharing this screen for the students online because I'm a little bit worried that I don't know how much time I've got left here. Doesn't matter if I don't get to the end because there's only a page or 2 left and it's just a summary. So I'll go back to the share screen. So the counting is going on.
$103.
103 in one box
100.
and exactly 100 in another box. Okay, so
There is other 20.
there's something else in there. How bizarre. There we go. So we have found no errors in there, and we would say, because they were all at least 100, that there are no material misstatements. Okay, so let's just recap, and you have to excuse this because I'm still talking about in the overheads, just in the PowerPoint slides, I'm still talking about the Ovaltine chocolates, but I'm going to change those items to 100. So our objective here was to provide independent verification that each packet of paper clips had at least 100 items in it. We decide whether audit sampling applies. Yes, it did, because we didn't want to test them all. Define the attribute that should be present, at least 100 items in the packet, and a misstatement condition is fewer than 100 items in the packet. Our population was the shipment of how many bags that we received, or how many packets we received. The sampling unit was 1 little box of paper clips. The tolerable misstatement is the percentage of packets that can have fewer than 100 items before I feel like I've been cheated, maybe 5%. The sampling risk, my allowable risk of incorrect acceptance is 10%. So I'm willing to say that there's a 10% chance that I say there are no misstatements and actually there is. And like I said, if it was with a very high valuable item or something, you know, a medication, my allowable risk of incorrect acceptance would be much, much lower than that. I would have to be much more confident. And the estimate of misstatements in the population, let's say 1%, because I said I'd accept 1 either way, or 1 less, and we got that because we only had an overstatement. And determine the initial sample size, and it depends on how many people. So that just runs through those steps, and I hope that it helps you to understand what actually goes on in sampling in audits. Absolutely, every bit, and in the planning stage, the whole thing is documented. That's right, and the results are documented. So we have, here's the plan, all documented. It's being carried out. This is what's being done, documented. Results, documented. That's right, that's right. So that's the evidence that they've actually done their audit. If there's no documentation, there's no evidence. Let's just click through that because we've already done that. The steps in audit sampling: select the sample, perform the procedure, and evaluate the results. So we select the sample. Oh, see, I've gone back to packet of peas. I've got to update these slides. And perform the audit procedure. So I might select them randomly, haphazardly, or systematically. I can only use haphazard if I decide I'm not going to do statistical sampling. And like I said, the majority of auditors don't use statistical sampling, they use judgmental sampling. Then I perform the audit procedures and evaluate the results. So I generalise from the sample to the population, and I analyse the misstatements and decide on the acceptability of that population. So I say, I've got 10% errors in the sample, I have to take account of my sampling risk. Could be there are more than 10% in the whole population. I analyse the misstatements and decide whether or not I can accept these numbers. Are they materially misstated or not? So to recap, the questions you have to ask yourself: can you work out when to and when not to use sampling for audit procedures? These are things you have to be able to do for the exam. If I gave you a scenario, could you work out whether you're going to use sampling or not use sampling? Do you know the difference between sampling risk and non-sampling risk? Do you know the difference between statistical and non-statistical sampling? Can you explain the steps in planning a sample test? So if I gave you some steps, could you describe what they mean? Could you indicate factors that affect sample size? Not so important, but you need to have a look at them. Remember, it's an open book exam. You need to know where the appendices are. You need to have a copy of it. So if you got asked a question, you know that you have to look at the appendix. Describe the methods of selecting a sample. Random, systematic, or haphazard were the ones that we looked at. And know how to apply systematic sample selection. So if I asked you to do a systematic sample selection, or if I asked you something about it, you would understand that. And know the steps involved in audit sampling. I said that. And if you know that, it's at a very superficial level. I'm not going deeply into this. You could have a whole course on it. And we don't have time for that. Do these questions. Question 1325, I also want you to state, in response to that question, what the population is, what the sampling unit is, the attribute of interest and the deviation conditions, and how you would select the sample. And so they're questions for next week. I went through that quickly, but now it's a matter of you going through it again on your own to fill in all the gaps. So where there are things you don't understand, you need to go back and you need to go to your textbook and fill it in. To answer these questions, you try to answer these questions. If you can't answer these questions, you'll look it up in the book. Don't just accept that you don't know the answer. You've got to find the answer, and then you do these questions and come along the following week to answer them. Now we're going to go to the part of the class which we normally have at the beginning, which is looking at the questions from last week, but I'm going to take a break, so I'm going to finish the Zoom session and I will start the recording again in a minute.